Hello guys, welcome back to another video from Collaterals series by Book. This time we are going to talk about business loans. Here are some important factors to consider when applying for a business loan. A business loan comes as a boost to your business, enabling it to finance its expenses as well as expand its operations. When it comes to taking business loans, there are numerous sources of credit for a prospective borrower to consider, the foremost of which are banks and financial institutions. These organizations are of two types, public and private sectors. The fundamental differences between these two kinds of entities largely determine their advantages and disadvantages to the borrowers. Private sector financial institutions offer borrowers the benefits of flexibility and speed. However, they are also comparatively conservative in terms of their risk appetite and set significantly harsher terms than public sector banks. Conversely, while public sector financial institutions often move relatively slower than private sector entities, the terms of debt and ability for larger exposure works in their favor. Given their service to the nation motive, they are mandated to encourage private enterprise and adopt a more partner-oriented approach even in times of irregularity due to business contingencies. If a borrower decides to opt for a loan from a private sector institution instead of a public sector bank based on one's specific requirements, then one should consider the following points while negotiating a contract to ensure one's own interest. Number 1. Default acceleration clause. This clause states that if a borrower fails to pay a specified sum within a stipulated period, the financial institution from which the money was borrowed can demand the immediate return of its principal amount along with the interest due, effective immediately. The problem lies in the fact that certain clauses may also empower the financial institution to declare a company's account to be a non-performing asset if it defaults on a payment to another lender, or even if a company to which it is linked through a clubbed account fails to honor a loan payment to an unrelated lender. Default acceleration clauses safeguards the interest of banks over borrowers, which is why it is essential for any organization to negotiate to have them removed altogether, if not made extremely specific. This would mean having the agreement cover very precise terms as opposed to just vague statements that would favor the bank. It would also require limiting the legal authority of the lender to impose penal actions against the borrower, thereby saving the organization from undue financial and legal burdens in unforeseen circumstances. Secondly, higher upfront fees. Many private finance companies charge borrowers high initial consulting fees, security deposits, and initial payments. This is done with the intention of having the borrower spend large amounts of money so as to dissuade them from switching to a cheaper loan when given the opportunity at a later date. To avoid being tied down in such a manner, companies must negotiate to have these initial fees and payments kept to a more reasonable amount. Number 3. Security clauses. Security is an asset against which a loan is taken. It serves as a collateral in case the company defaults on its payments and serves to allow the lender to recover their money in case of such an eventuality. Most lenders demand collaterals that by far exceed the value of the loan, and in many cases, it is in their best interest for the company to forfeit on their payments because the asset is worth significantly more than the loan itself. To avoid risking such high value assets, it is necessary for borrowers to negotiate more favorable terms. Before you sign on the dotted line, make sure you understand what you are signing. Not all loans are smooth and simple. There are a variety of options out there, so look closely at the terms of the deal. Be aware of the payment structure. Is there a balloon payment at the set date that you might not be prepared for? Is the interest going to amount to more than the principal over the life of the loan? Are there origination fees or early payment penalties? These and other factors should be thoroughly considered before taking on any debt. We hope this video helped you. Do subscribe to Collaterals. Thank you.